The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Cristina Alba Ochoa and Valentina Kristensen, CFO and Head of Communications, respectively, at OakNorth, one of the UK's leading challenger banks. We update on OakNorth's recent milestones, including some big fundraises at massive valuations, and discuss the current state of play in SME banking in the UK. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Cristina Alba Ochoa and Valentina Kristensen. Valentina Kristensen and Chris Alba, welcome to Rebank.
Thank you.
Thanks. Great to be back again.
Will.
Yeah. All right. So we've connected with you guys before and covered OakNorth in some detail. Maybe just kind of to refresh people's memories. Title, kind of function within OakNorth, and then maybe you guys give me a quick update on very exciting progress recently.
All right. Okay. I joined OakNorth back in, started working with them back in June 2015. So before they had launched, shortly after they got their license in March 2015. So I've been with the bank, sort of pre the first client, and where we are today, which is it's very exciting. Very different type of company. So I'm Director of Growth and Communications, so sort of doing a whole host of different things, but mostly sort of building out the community, PR, marketing, and project managing a few different things more on the on building that community. So it's sort of never really, we always joke about when you're at a startup, it's never really the job that's on your business card. It's always kind of a million other things in addition to that. But on the business card, it's Director of Growth and Communications.
All right. Chris?
So I joined now more than 18 months ago, OakNorth as the CFO. So that's easy as it says in the card. So you do this finance and many more things, mostly project management and leading many initiatives to help the growth of both the bank and the fintech platform, which is now exponentially growing.
Excellent. So correct me if I can't say this, but just for clarity, because I think we talked about it on the last episode that we did together. So this is the fintech platform previously known as Acorns.
Yes.
Which will in the future no longer be known as Acorns, but which is the basically software component that you guys have spun out of the bank. So developed for yourselves, spun out of the bank, and are now marketing in other geographies. We are,
it's a platform as a service. So it's fintech, it's processes, it's know-how that were tested successfully here in the UK through OakNorth. And you're right. We decided that being a new entity and having two different brands probably was too much of an effort from our marketing and sustaining two names. And it's too early for us to have two different brands. So we're going to go with the fintech platform of OakNorth. So that's the
perfect. So both under the same brand name, effectively, same company.
Exactly. Yeah,
Makes
one
sense.
of them will be sort of, so the platform itself will be called OakNorth Analytical Intelligence. And so that will sort of make the distinction between the bank. Obviously, OakNorth here in the UK, if you look at, where we are today, we've lent 1.8 billion. Clients really across the UK, increasingly, outside of London and the southeast, and a variety of different sectors. Obviously, property development, property investment, but also lending to private equity firms, care homes, nurseries, schools, universities, art galleries. So, restaurants and bars. Brasserie Blanc, which I know is just across the road. So a really nice broad spectrum, and we've got about another billion in the pipeline as well. So really good sort of traction for the next few months as well. We expect to do another £500 million this year.
Wow. Well, that's phenomenal. And just, I guess to give a bit of context, this is kind of racking my brain here because it's been a while since I've looked at these figures. But I think the first wave of quote unquote SME challenger banks in the UK, the likes of Aldermore and Shawbrook, and I guess to an extent, Metrobank. I think after about 5 years, maybe had £3.5 billion of kind of loans outstanding. So repayments along the way, but you guys are clearly on pace to top that. It's amazing. So, Chris, maybe you can tell us about your big recent news, which I guess was announced. What it would have been maybe earlier this month, right? We're still in September.
Early this month.
As of recording. So, tell us about the fundraise.
So it was very exciting. The fundraise took some time. We've raised $100 million at an outstanding valuation of $2.3 billion. That it's almost a 50% increase from the prior one that we did less than a year ago. So that has been a testament of the proven success of the fintech platform, because at the time we did the other round, that was just a concept. Now we have $5 billion of assets under management in the fintech platform. And one of the clients that we've got is NIBC, is also one of the new investors. So it has been great commitment from their side as well, and really believing in the concept and that this is going to be successful for them organically and also as an investment for them as a bank. So that's really, really exciting that when you explain that to a client, they say, I really want it here and I want to invest. and not only that, at a higher valuation that we did 6 months before. So that was good. Then also external investor was EDBI. That it's one of the funds in Singapore. So we already had GIC as an investor, and EDBI, that was introduced to us by GIC, said, well, we want to be in this as well, and they've invested in us. So those are the two main institutional investors, new ones. We have other new ones, but are more privately raised, and the existing ones such as
Coltrane.
GSE, Coltrane, Claremont have decided to increase as well, to keep their share of the ownership of the company. So super exciting.
Wow.
There was the point of where we were talking with Rishi about the balance of there's some of the existing investors wanted to invest more. And we had to say, we really don't see the path of how we're going to use all this equity at this point in time and keep diluting our employees and ourselves, right? So we said, this is the right size at the moment. And even when we need more, then we'll come out to the market, ideally, with a better valuation for us.
Yeah, I mean, I think it's really exciting for sort of the next 12 months. The capital will help us to continue to grow our loan book here in the UK through OakNorth, but also to continue scaling the proposition through the fintech platform, OakNorth Analytical Intelligence.
So one of the things I wanted to get into today with you guys was, it's kind of interesting to see this space evolve, and clearly we're far from saturation, but on the SME side, you guys are continue to do amazing work. There's some others kind of coming to the market, both in like the sole trader end of the market and the kind of slightly larger medium sized business. And though I think the SME space is a bit behind in terms of what progress has been made in the retail space, and we're kind of getting this interesting point of tension on the kind of retail digital only space in Europe, UK, I guess, in Europe, with kind of Monzo, Revolut, and N26 starting to kind of butt up against each other. And I mean, it's a massive market. There's, I think, scope for everyone to grow, but I don't know. It feels like we're at an interesting point.
I think what's interesting is that obviously with the RBS remedies package, as you sort of said, it's sort of like SME's always been, for a lot of banks, sort of falling a bit at the wayside, and the moment in the spotlight has always been really on retail. And it's funny that now with the package, you're suddenly seeing many new banks coming, launching, whether it's sort of white labeled versions or new digital offerings from existing players. With a focus on SME banking, whether that's a pure sort of current account play, whether it's through lending. Most seem to be going after the current account because it seems to be the biggest grant available. I think
pools A and B, like the two
pools
biggest
A and B, exactly,
pools
the two
require
biggest.
a current account.
And we don't offer current accounts, right? I mean, Pool C would be the one that we would be looking at. It's just interesting to see kind of how many have now come to market saying, "Oh, this is what we're going to be offering," because they can see that there's potential to get 100 million in the bank as a result. Not really, I think necessarily what the fund was intended for, but it'll be interesting to see come February if that's when it actually does happen.
Yeah, it's already delayed by what?
A year now. Yeah, it was supposed to be allocated. The money was supposed to be allocated by now. So, it'll be interesting to see come February where it goes.
What impact do you expect the kind of RBS remedies package to have on competition in the SME space?
Well, it will increase competition. And that's not a bad thing. We see that as a good thing, as an opportunity. For us as a small entity, it's an opportunity because we are more agile than the bigger banks or the bigger entities. And also we are very critical and agnostic to what we're doing. So if what we are doing today proves to be not the right thing, we'll just drop it. We're not married to it. So we've launched some products that have proven not to be successful. We stop it. There's no point in keep throwing good money after bad money because then it all becomes bad money. So that's something that as a management team and the two founders are very clear on it.
If you're going to fail fast, for sure.
Fail fast, exactly. And that's something that not all entities are doing the same, right? So that's something that keeps us agile and low cost, protecting the capital and protecting the client as well, because we'll be here.
Yeah. Well, it's interesting kind of on the one hand, you've got this RBS remedies package. It's, I can't remember what it is, 885 million pounds or something, kind of basically being granted by RBS to competitors in the SME space, of course, at the behest of the HMT here in the UK and I guess the European Commission above them. But so that's kind of like windfall to the space. On the other hand, starting to see regulators extract some pretty massive fines. I suppose not by U.S. standards. Start talking about money laundering and some of these massive multi-billion-dollar fines that have been levied. But Tesco Bank just this week, so they had an IT issue, some sort of cyber attack, I guess, about 2 years ago now, and
quite a while ago, yeah.
And so the FC announced they were going to fine them potentially £30 million for this, which was seen as a massive amount of money. Tesco Bank is not a huge bank. That would be a significant hit for anyone of that size. And I think it was something like 20,000 customers were affected by that. And so, analysts are suggesting if you extrapolate that out and think about what a cyber incident at a Barclays or Lloyds or an RBS might represent in terms of customer numbers, if the fine were proportionate, then it's easily in the hundreds of millions of pounds, which is potentially massive. So you've kind of got this cyber risk, which is increasingly relevant on the one hand. Don't even want to think about what is going to befall TSB when the regulators kind of work their way through all of that. But that will not be pretty. Yeah. I don't know. I mean, then you kind of got. I'm a Monzo card holder. I'm sure you Val, and maybe well. Chris are too. But and they're making. They're kind of making headlines because there was a British Airways breach recently.
And they printed the cards out pretty quickly.
Yeah, exactly. So they kind of like proactively canceled cards and resent them, almost before, this thing was even announced. And there was something, I can't remember, but, it was Ticketmaster, I think. And they had basically kind of through their fraud algorithms picked up these kind of Ticketmaster purchase issues before Ticketmaster had. And I think Tom of Monzo was even talking about how they had kind of reported this to Ticketmaster, who'd kind of ignored it or kept it quiet, and eventually it came out. So on the one hand, you're thinking, wow, I would feel much safer with my money at a digitally focused, modern kind of tech-enabled bank versus one of these traditional banks. you guys, at least from a banking process standpoint, are very, very technologically advanced. I'd be interested to get your thoughts on how you and indeed other newer banks are positioned vis-a-vis incumbents when it comes to cybersecurity.
Well, I think we are all very respectful in this space, right? Because we are all targets, and the reason why cyber attacks exist is because someone wants to do a criminal activity, meaning they want to steal from someone, right? So it's not a super cool con for doing a movie. It's just real stealing data, stealing money from someone. So the targets are normally the bigger, the bigger banks, the bigger entities. But I don't think any of us is free of the risk of this happening. So we are all very cautious in what we do and what we say, because we are all exposed. And I think the incumbents are spending huge amounts of money to make sure that they are protected, and they are being attacked per minute. The bigger banks, they receive an attempt attack per minute. We do receive...
I mean, HSBC said they get 13,000 a day.
Yeah.
I mean,
so,
it's just like
a
crazy number.
It's non-stop. There's always someone that is targeting you for see if it works. So the bigger ones, the bigger banks are going to be the target from many places in the world. Ourselves, the new banks are targets as well. We receive attacks, yes, absolutely. Do we have our website cloned more than once? But we detect it within hours and put the website down, the clone one. So that happens to everybody. So it's how do you react, how management reacts to these issues and attacks. So we are heavily investing in cyber. We've got more and more people fully dedicated to only prevention of cyber attacks, but it's never enough. And it's finding the right balance of where you don't know what you don't know. So you don't know where the next attack is going to come from. So when something has happened, you would prevent that forever, and that will never happen again. But it's when something new happens that you had not predicted, that is what it's going to caught you with the guard down.
I think where we have where new banks like us have a benefit over the larger incumbents is obviously the fact that we don't have any legacy. All of our systems talk to each other in a very seamless way. I mean, we in 2016 we moved to the cloud fully. So our whole core banking platform fully in the cloud, not just sort of ancillary services like CRM or email. And obviously now, the PRA is looking at multi-cloud. And sort of legislating around that, looking at making banks have sort of a backup because there's obviously risk if there's too many sort of with one provider. And I mean we've done business continuity tests, and we can rebuild our entire core in 5 hours. I mean that's just something that sort of the time frames that large banks dream of.
Look at TSB.
Yeah, exactly. I mean I think it's a huge benefit, because it means that if something goes wrong, you can hopefully resolve it in a fraction of the time. And you can also spot it in a fraction of the time, because we don't have sort of these spaghetti systems where you're then bearing through to try and find out where the problem's occurring. Mm-hmm. And sometimes, and more often than not, whether it's, I mean, obviously not, I don't know the specifics of the TSB issues, but wasn't it with Visa, a little while ago back in summer, and it was like someone had pressed the wrong button or something. I mean, it was something so crazy like that, and you just think, of course, there's a degree of human error. I mean, it's not even a cyber attack. So just whatever you can do to make yourself as robust and as secure as possible, the better.
Yeah. Well, on the point of TSB, and sorry for kind of laughing as I say this, but a report in the Telegraph this week about how they're going to apply for their share of the 800 plus million pound RBS fund. Mm. I hope they don't get it.
I mean,
come on.
Yeah, I mean, we'll just have to see sort of how it gets allocated. I think there's been. I know there's been sort of Anne Bowden from Starling has been pretty vocal on it, talking about, I think she did an op-ed for City AM on it about, sort of TSB and Santander, and they shouldn't really be allowed to apply because, they're just far too big. And if the whole point of this is about increasing competition, then just excluding the big four seems a bit crazy. I think, but then, equally, I mean, of course, what they have huge amount of resource. What they could do with 100 million probably wouldn't change that much from day to day. What a Starling or what, we wouldn't apply for 100 million, but 10 million, that's sort of a huge difference for us. Whereas 10 million for them is like pocket change, what you'd see in terms of the difference for a consumer, I think could be, significantly bigger with a small new bank versus one of the incumbent players.
Yeah. Val, is what you said earlier. I'm really curious to see what's the result of the allocation, because that's going to really prove if this is for increasing competition, or is that to share the pie with the big ones and everybody has a slice of a quarter of the pie, or it's really for helping the smaller ones introduce more competition in the SME area.
I mean, because the one thing they didn't really do when they announced this remedy package was define what increased competition meant.
Yeah.
And I guess, simplistically, it's kind of reduce RBS's market share. And so there's one school of thought that says the best way to do that is to, give more money to, I don't know, Lloyd's and HSBC, and I suppose not specifically in this case, but, TSBs and Santanders of the world, because they're already recognized brands, and with a bit more, firepower behind them, they can actually, take a, multi-percentage chunk of RBS's SME base. To me, I don't know. Yes, fine. Like, I suppose to the letter, maybe that increases competition per se by that metric a bit more. But does it really kind of like progress the market in a way that will have almost certain positive impacts on all customers across the board, because it'll start with the new experiences that they're exposed to via challengers. It will, by definition, kind of force incumbents to continue to keep pace. I mean, to me, you have to support the smaller and kind of mid-sized newer challenger banks through this.
Like offering current accounts is not something easy, right? It's not rocket science when you think about it, but it's very complex technically and very expensive to keep up with all the regulatory requirements, all the
system resilience,
guidelines,
the personnel requirements.
So all of that is
expensive.
very, very expensive. So if there is no support, it's very hard to say we're going to go and do it if you don't have that subsidy. Yeah.
But I think also, it's okay. This, it's great, and obviously, if it gives us, if we're fortunate enough to secure one of the grants, it's an extra 10 million that we didn't have before. So, really, really fantastic. And the same, for some of the other players that are applying for the current accounts, it's an extra potential 50 or 100 million that they didn't have before. Really quite business changing sums of money. But it has to kind of go hand in hand with the regulation. If you look at the regulation, there's a lot of disproportionality still between challenger banks and larger incumbents. You look at things like a few years ago, the replacement of the bank levy with the corporation tax surcharge. Now, I get it. When Osborne announced that, he probably didn't anticipate that we would become profitable as quickly as we did. But that means that for any sum over 25 million, we get taxed an extra 8%. That's 8% less that we can lend to SMEs. That's 8% less attractive from an investor perspective, for us as a business. And that's something that...
Well, it's 8%, divided 20. By 8%, percent in terms of what the actual capital requirement is, and therefore what you could be lending.
Right. Right.
Exactly.
And we're still growing challengers, so yeah.
So it's just, those sorts of things. We look at other things like, not to go sort of into the really boring regulatory side, but, risk-weighted assets, right? I mean, you're having to take the IRB approach versus the standardized approach, which again makes it disproportional in terms of how much we can lend versus an incumbent player.
Because you're on the standardized approach.
Exactly.
Yeah.
If you look at...
And presumably will be for another couple of years.
I mean, it will be for another decade.
But then, you think about some of the regulation is obviously at the EU level, right, versus the UK level. And potentially, once we exit, whether that happens in March, I don't know. But once we actually exit, then there could be, an opportunity to sort of revisit that and potentially create some more proportionality in the regulation, which would be, in terms of increasing competition, coupled with things like this, that's, I think, where you can see a real difference.
In the news just this week, Ross McEwen, the CEO of RBS, in some sort of fireside chat, which I guess incumbent banks do. You guys do fireside chats? Do you? No.
What,
we don't need
Q and
fire
A's? You mean?
yeah, maybe.
I mean, by the heater side, or
Maybe that sounds makes it sound
no,
much more
really.
glamorous.
I mean, we are naturally on fire, so we don't need to be by
There you go.
Exactly. Great answer.
So he said that small lenders and challenger banks will struggle as larger rivals such as RBS pick up speed.
Yeah.
After a decade of struggles. So apparently all this restructuring work that they've been doing, their cost-cutting work, I guess, and efficiency enhancements, and once this, I guess they have this whole like PPI and other mis-selling and misconduct scandals behind them, they're going to kind of take the shackles off and start accelerating again, and the challengers won't be able to compete. Views?
Loads. But high level, that's what I was trying to refer to earlier. Of course, they're going to get their act together, but still there's a big difference. They still have legacy portfolios and legacy systems. The conduct issues with all PPI and the distractions that have been there are going to be replaced by Brexit and others. That's a reality in today's incumbents, and not only in them, but on the regulators as well. There's only one item in the agenda for the government and the regulators and the incumbents. It's Brexit. And once a decision is made, it's going to be the consequences of Brexit. So that cannot be discarded. And for us as challengers, we are just not as impacted. And if you remember, after the Brexit vote happened, it's when we saw an overwhelming, unexpected wave of loans coming to us because the other banks decided to shut down because they had too much to think about. There was nothing yet. It wasn't even happened. It was just the fact that the vote said yes, they shut down the lending to SMEs. I don't have a very strong view now on mortgages to mass and affluent and residential mortgages, because that is easier to keep going and the risk is more mitigated, so they don't need as much management attention from the top management. But I accept that there's going to be more competition, absolutely, but there's still another big topic in the agenda, and we are, all the challenges, I think we are very aware. We have our sector conversations. Everybody's very aware that we need these substantial revolutions internally on our side to make sure that we keep competitive, we stay competitive. I mean, the challenges are not just an idea anymore; they're a reality. There's the way that a few years ago Osborne himself spoke to the regulator and said, I want you to set up new banks. I want you to create competition in the UK because this is not a competitive market. There was no license for almost 100 years, no new license. So, and then there were new licenses, and there's these competitors, and it's here to stay.
Yeah, I mean, I think, it's exactly as Chris said, if you look at, I think back in the Metro Bank days, 2010, it was sort of like, oh, well, are these challenger banks really going to, be able to come to market and dominate? I remember from working on Metro Bank back in my previous role, and they, they sort of had their target of 100,000 customers for the first year, I think it was, and they reached it in the first month. I'm not sure how many they have today. I think it's about maybe 3.5 million current account customers. But I mean, if you look at the how that compares, I mean, Monzo's, I think they crossed the million customer threshold this week. Revolut, obviously globally, is about 3 million, about 1.4 million in the UK, and these are businesses that are pretty young, right? So I think you're seeing a lot of that growth is sort of accelerating at a very different pace than it was historically. But I think the difference is that over the next few years, you're going to see a sort of expectation. Okay, so you don't have bricks and mortar like a Metro Bank did. Your costs from the beginning have been much lower. So the question around profitability, the sort of profitability versus growth, the ongoing discussion, the sort of Silicon Valley mindset about growth at any cost. But, at what point can sort of the losses continue to grow without that, without sort of seeing the change? I think we're in a strong position being a profitable bank. We were able to prove that this is, it's not just a strong proposition that, we can get great businesses. I mean, 1.8 billion lent, no defaults to date, 300 million repaid. Anyone can lend money. Getting it back is a challenge. Mm-hmm. But we've also done it profitably. right? I mean, that's a big thing. We're actually making money, and not an insignificant amount. 10.6 million pre-tax profit in our second full year of operations. I mean, by any business standard, that's pretty good. So I think that's going to be the sort of conversation of the next 5 years. It's not whether challenger banks are relevant or not, whether they can really compete or not. It's okay, where are they going to be in 10 years' time? How many are still going to be around, and are they going to be viable businesses with profitable balance sheets?
Yeah.
There was some conversations at the European level. I remember that were saying some of these big banks will not exist in 30 years because they will not adapt, and they will start doing subsequent dispositions of some of the divisions, and then they will not exist the way we know them. And the future in banking is through having more technology, and to have the right technology everywhere is very expensive. So they will come with more specialized banks.
I mean, yeah, if you think about it, in 30 years' time, I bank with First Direct, so as my main current account provider, and then I have Mons as sort of my fun account until they offer the full suite of services that I need. So I don't go into bank branches, right? And in another 30 years, I mean, basically anyone who's opening an account between now and 30 years' time certainly won't be going into a bank branch, even if they are, taking on the same account that their parents have. So yeah, I mean, you see branches closing down more and more. That's the sort of cost reduction exercises that you read about in the papers. So yeah, I mean, there will not be this sort of, okay, it's a digital-led bank, because all banks will be digital-led. I mean, their branches will be, probably reserved for a few regions where perhaps there's not, well, actually, that probably won't be a discussion in 30 years' time, because internet will be strong everywhere. Everyone will be on 5G or whatever. It will be 7G or whatever. So I just think the sort of no branch, digital versus no digital discussion will be sort of obsolete by that point.
Yeah. Well, it feels to me like we're at we've gotten to kind of an extremely interesting point, and almost on the precipice of a more interesting one, given the kind of, I don't want to say maturity of the challenger bank space. So the model's been proven. People are making money. They're challenging incumbents in certain areas, and they're certainly taking away profitable business. On the retail digital bank side, you've got a bit of this tension as they kind of butt up against each other. You've got this money that's about to kind of wash into the market with the RBS remedy package, and interestingly, it's almost like the pressure kind of shifts to the incumbents to prove that their models are actually still viable. We'll be interested. It'll be interesting to see where we go from here. Anyone who has listened to previous episodes we've done with you guys knows where to find you guys, but just as a refresher, Where can people connect with you?
So if you want to find about a loan with OakNorth, it's www.oaknorth.com, and the new domain for the fintech platform is oaknorth.ai. And you can also find us on Twitter, LinkedIn. If you want to get in touch with me personally, I'm on LinkedIn or Twitter at Val Kristensen.
Same.
Perfect. All right. Valentina Kristensen and Chris Alba, thank you very much for joining us.
Great.
Thank you.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.